Hello, it's Friday the 2nd, I'm FX Blue, and this is the market brief. So, who remembers the sausage war, where the EU have banned imported meat products? It means that the UK can't export to Northern Ireland due to the issues with the Irish border. All fun and games with a silly headline, but it somewhat masks the very real issues that UK businesses face when grappling with EU requirements in a post-Brexit world. And when the pandemic kicked off so soon after Brexit, the true effects are yet to be felt, as the economic impact was obviously overshadowed by the lockdown effect. But in 2 weeks, the last of the restrictions will be lifted, so perhaps analysts will be able to better judge the Brexit effect going forwards. Now, depending on who you ask, the UK trade could be down anything between 5% and 25%. Naturally, the EU's official statistics are the most pessimistic there, but they're motivated to show that leaving the EU is not beneficial. Meanwhile, in the market, sterling broke through short-term support against the dollar. We fell to 137.50 yesterday. And euro dollar also fell to 118.50, and both of these moves are reflective of the market moving into the dollar ahead of today's non-farm payroll data. Naturally, the hope there is for a big headline number which will kick the dollar on further. And so here we are again. Nonfarm Friday, your favourite day of the month. Well, perhaps second to payday, but taking the top spot in the sweepstake, whew, money can't buy that. Trust me, plenty of you naughty little sweepstakers have tried. This month, though, it is pretty pivotal. The US recovery has really taken a hold, and the market wants to see employment data reflecting the economy is indeed close to pre-COVID levels. This would certainly help clarify some of the mixed messages coming from the Fed, where different officials have suggested perhaps Q3 would see the highest rise in both GDP and inflation, and then some have said they expect tapering support to begin before year end. ISM Manufacturing data showed robust output from that sector. It was slightly lower than last month at 60.6 against 61.2 in May, but it still remains strong. But today is all about employment data, and that looks to be heading in the right direction. Weekly jobless claims continue to fall. We saw 364,000 new claims. That's down from 415,000 last week. ADP private sector jobs, they posted 692,000, which beat expectations, again despite being slightly lower than last month. But that was then, and this is now. Non-farm payrolls is the only show in town today. The headline forecast is for 690,000 new jobs. A strong number could kick the dollar bulls on to a dollar rally, claiming the recovery is all but done, while a big miss, well, that could even help Biden get his next stimulus package signed off by Congress. There's a lot riding on it this month. So what do you think? You know the drill. The bar is 690 this month, so are you joining hashtag team over or hashtag team under? Drop your bid in the comments below and get your name up in lights on that whizzy little graphic after the data is out. If you're nearest the pin, you can float smugly into the weekend on a cloud of victory. Me? Well, I'm feeling optimistic this month, so in the spirit of the Tour de France, I'll be a lead-out rider for hashtag team over. In it to win it, 750,000. Good luck to you.
If you do not have a clue, then just tweet through and ask FX Blue.